What's going to happen is we're going to get 100 plus digital assets ETFs that come to market in the next 6 months. You go 12 months after that, I wouldn't be surprised you see
Half of them are gone.
yeah, a lot of them are going to be gone.
So look, you're clearly the foremost expert on the intersection between crypto and ETFs. We've obviously got the first round of these things out, huge uptake. Now we're sort of down to the weeds a little bit. We're getting the filings for staked ETFs. We're going below Ethereum and Bitcoin. What's your prediction for how that tail of the curve is going to grow? Are we going to see a lot of adoption there? Are we going to see a lot more product, or is there a natural petering out?
Yeah. Honestly, I wish I knew the answer. I obviously have my views on what I think is going to happen. I think the long tail of assets, they're not going to be able to have 5 different ETFs. You know this, right? Like you're not going to have like the 13th largest crypto asset have 9 different ETFs tracking it. Right. Probably not. Then again, the single stock era has like kind of made me think that maybe again you can get a 2x and inverse covered calls, super yield. Who knows what's going to, that's happening. There's buffer products, there's defined outcome products on Ethereum and Bitcoin, and probably going to have on these crypto index products. So I think we see demand for Solana and XRP off the bat. We already see products that are, you have the Rex share, the Rex Osprey products, which are pseudo spot products. They've done pretty damn well for high fees and not the most cleanest structure.
Those are the ones that sort of go through the Caymans and that whole thing.
They're 1940 Act products. They don't fit under the 1933 commodity shares process, which we just had the approval for. So we know there's demand there. But what I think the most demand will be over the long term, personally, is these index products. I think a product like Bitcoin will probably always be the largest area of digital assets ETFs. I don't see that changing. Akin to gold, which they talked about on the last panel we were just at this conference. I think Ethereum, they have such a big lead, it's going to be hard for anything else to take up second place. But if anything does do it, I think it could be the index products personally, because if you have a lot of people, they think of digital assets, they think Bitcoin. Bitcoin is crypto, crypto is Bitcoin, and they don't understand like all these other long tail of assets. And if you're an advisor, you might have some Bitcoin exposure if you're interested in the space. Like you might just want a product that's going to give you beta to the entire thing. It's almost like, it's like the tech boom in the 90s, right? Like if you had tried to pick a couple of stocks, you probably blew up. Right. But if you bought some sort of index, you ended up owning, you know, Google, Amazon, some of those really big high flyers. And I think that's probably how this is going to play out. Like, I don't think you're going to be able to have 300 different assets in the digital asset space that become trillion-dollar protocols, but you could get a few.
It feels a little bit like the build out in commodities ETFs, where initially everybody was like, well, people will buy oil and they'll buy gold. And then when you actually look at where all the assets ended up, a lot of that flow ended up into big sort of boring indexes that included all those things, and people picked up a little wheat along the way. You know, we've seen a bunch of those indexes launch. Some of those products are still trading in the trust, like Bitwise has the Bitwise 10 product. I know Grayscale has their own versions. Everybody will end up with their own versions of these things. Is there much room for differentiation there? Or are we just going to end up with, you know, the one that BlackRock launches will get a bunch of assets, and then Bitwise will get the institutional version, and then everybody else has to compete?
Yeah, I don't know. I hope that's not the way it breaks down. I think there's a lot of value to be out here, right? You could do market cap weighted. I think products that there is a product out there now from CoinShares that's like, it doesn't hold Bitcoin and ETH, but it does an equal weighted exposure to a whole bunch of other assets. I think if you do a market cap weighted X Bitcoin ETH or just X Bitcoin, somebody might want to choose their Bitcoin exposure, then, you know, do what they want to do. And then you can have actively managed portfolios, equally weighted. But I think the market cap, probably just because of the way that advisors think, are going to be the winners.
Well, do you think there's the demand there, right? Because what are we at in Bitcoin ETFs now? We're 90?
No, we're yeah, like I mean, IBIT alone came close to hitting 100 last time. Bitcoin.
That's right. Okay.
So we're at like 130, 140. Right. But gold ETFs are by themselves. Bitcoin ETFs came close to catching gold ETFs at one point. Now gold ETFs have gone away.
Right. Yeah, but so we've got there, so call it 130, and then we've got the ETH ETFs, which are about 10% of the size, something like 10,
yeah,
15
a little bit
billion,
more than that.
15, 20 billion.
Yeah.
So like clearly there's a curve, right? A Solana is going to be less, and XRP is going to be less, and then we're start getting into the coins that nobody really knows. Is there really demand for that? I mean, if you're interested in XRP as a portfolio asset, aren't you probably already owning your own crypto wallet, and you could probably just get that yourself?
So honestly, that was kind of what everyone was telling me about the Bitcoin ETFs too. keep in mind, right? Everyone was telling me the Bitcoin ETFs, there will be demand, but like if people really want an exposure to Bitcoin, they already have it. Same thing with the Ethereum ETFs. I mean, the Ethereum ETFs have taken in $15 billion and almost all of that has come in the last 6 months, right? So for whatever reason, you put an ETF wrapper, there are people who are interested in the space that just don't own it. If you're an advisor and you want to put 1% into these types of things, do you really want to go out and open like a Coinbase account or Gemini account or SMA?
Sure.
So you just go with the ETF. So I think there will be demand, but I agree with you. The long tail, I don't know if you're going to get a lot of interest. I think there's a lot of interest for things that are trading vehicles, right? So I think some of these longer tail assets will become trading vehicles. They can get tens of millions, maybe hundreds of millions of dollars in them in the ninth biggest digital asset potentially. Do I think it's going to be a $130 billion category for one asset again? Almost certainly not. Right. But I think the index products, again, there are protocols out there that people think could become things that almost, I don't want to say fully replace, but supplement what's going on in the traditional financial markets. That's like a lot of the theory behind the things. Other than Bitcoin, you can do tokenization, a lot of things. I know you're a big believer in tokenization and what it can do.
Let's flip the script on that then. So that's the left side of the curve. The right side of the curve is how crypto as a technology, how blockchain as a technology is impacting our TradFi markets. The ETFization of crypto is alive and well and happening right now. The moving of traditional finance onto crypto rails or adopting some of the features of crypto rails feels like it's taking a lot longer. Am I wrong on that, or do you feel like there's some shoes to drop right away?
I'm fully with you. I think it's going to take a long time, right? Like, I mean, there's still issues. Like we had an AWS server today when we're recording this, and like it messed up some layer 2 protocols, right? Like there's a bunch of other things that like kind of got messed up because of just, the systems. That
and yet the stock market opened.
Yeah. You can't do that, right?
Right.
So admittedly, layer 1s, Ethereum, Solana, they seem to be operating fine without much issue. But other layer 2 protocols, which theoretically a lot of this, on-chain tokenization stuff might be occurring on, you can't really have that happening. So one, I think there's just growth. And the other thing I would say is like, we are moving really quick. And these protocols, these layer 1s are growing very fast. They're getting way more efficient. You played with this stuff back in 2017, like the UX, the UI, as somebody I would consider tech forward and tech savvy, was terrifying for me to use.
Yeah.
It has gotten way better. It's still nowhere near Web 2 or TradFi way of dealing with things. But I think a lot of this is going to be, there are people, they call it the DeFi mullet. It's just TradFi, fintech on the front and then DeFi in the back. It's the party. I think that's the way things are going to go, but there's regulatory problems we need to sort out. There's going to be, it's like this merging, right? Like Robinhood's trying to do stuff.
Schwab's talking about it, yeah.
Everyone's talking about it. I mean, NASDAQ's talking about doing tokenized stuff. I talked to people today, I won't say their names, who are looking into do tokenized versions of their ETFs and things like that, right? Like this is going to happen. People are going to dip their toe in the water, see what the demand looks like, see what the use cases are. Like who knows where this is going to go. But I think it's just going to be a slow grind. Like even if you get a few $1 million or a couple $100 million to do these tokenized sorts of things, in the grand scheme of tens of trillions of dollars in the U.S. financial markets, it's a drop in the bucket.
All right, last question, and then I'll let you go. You've got your fingers on the pulse of this stuff. It's October 20th when we're recording this. What's the next shoe to drop? What's the next thing that you're like, this is the thing that's going to be interesting, people aren't paying attention to?
Ooh, that people aren't paying attention to. I mean, what's going to happen is we're going to get 100 plus digital assets ETFs that come to market in the next 6 months.
100 plus next 6 months, okay.
I think so. I'm tracking 150 different products that have been filed that not launched yet. Some of those are like leverage products. So like, I don't know if they count, but we're talking about 35 different assets or a basket product that has all those ETFs tracking them. So there's a lot of filings out there. There's some that will be more imminent than others. We need the government to reopen. We're still in the shutdown while we're recording this. So Solana, I think, will likely be the first to get an individual asset. We already have some index products. You mentioned Bitwise. They're waiting to be able to convert. So I assume when the government reopens, they will convert BitW into ETF immediately. Grayscale's already converted. So it's just going to be this massive flow of ETFs coming to market.
All in the next 6 months.
All in the next 6 months. Thing is, much like the ETF industry is known to do, they throw spaghetti at the wall and they see what sticks. You go 12 months after that, I wouldn't be surprised you see
of them are gone.
yeah, a lot of them are going to be gone because one thing we actually did get right is people were arguing with us when the Bitcoin ETFs were going to launch that there's no way that 10 of these can launch and survive. And I was like, we were like, I don't know. There's like everyone we're talking to is somewhat adding us like a sliver of their portfolio to these things. If it's big enough, they get enough assets, performs well enough, they can do well. I don't know if you can have 10 products for, like I said, the fifth largest digital asset.
Right. I mean, it's a little bit like the S&P. We have, I don't know, 9 viable S&P 500 ETFs. 3 have all the money. I think we're in the same boat with Bitcoin.
Exactly. But even the 10th largest Bitcoin ETF is profitable.
Right.
Yeah. The performance of the underlying asset has done well enough. They've done well enough on flows to some small extent that it's almost certainly profitable for them on a revenue and probably net margin basis.
Slap more leverage on it. I'm sure it's more profitable still.
Yeah.
All right. Thanks, James.
Thanks, Dave.